Guys, we got an all-time high on the S&P again. Most of the sectors are green and some relative strength in travel names for once. Let's get to Bob Pisani. Morning, Bob.
Good morning, Carl. And we did open at a new high, but it's kind of flattish right now. And the market, the green side of the market is very defensive, perhaps understandably. We've had quite a run in the last 4 or 5 days. We're due for a pause. We're a little bit overbought. So in terms of what's moving today, healthcare, consumer staples, utilities, those are all classic defensive sectors that are doing better. Semiconductors had a great run, new highs on a lot of them, but kind of flattish today. Banks also kind of flattish. We look at banks and industrials, the more cyclical side of the market. Again, a little bit on the flat side. So very defensive, open to the market, understandably. New high list, well, yeah, we're at a new high in the S&P, but again, those new high lists, it's very defensive names on it. So you see healthcare names like United Healthcare is at a new high. A lot of the big consumer names, Procter & Gamble, CVS at new highs. Utilities, a bunch of them like Exelon, also at new highs. Again, this is very defensive. New high list. The smattering in tech, pretty small. Again, defensive. So why are we at new highs? It's pretty understandable if you get the basic concept here that the country is not going to have a mass shutdown. That's kind of what's going on. Look what happened to the CDC. How do you address the worker shortages? You shorten the quarantine period. That's what they're doing. Send them home. Put them away for 5 days. If they test negative, bring them back to work. Not shutting down the entire economy. That's the whole key to this game, because if you have that, then you're dealing with supply chain issues and inflation. You can argue maybe it's been peaking now. It's still elevated, but it's peaking. You don't have mass shutdowns. You have a shot that the supply chain is going to improve. At the same time, you've got rates. We've got a flat yield curve. Long-term rates aren't going up that much. And then we have the earnings tailwind, which is substantial. We're talking about the average estimate is 10% growth in the S&P for earnings in 2022. There's a lot of people who think it's 20% at this point. They're much more bullish than the actual numbers here. So you put it all together with a strong economy, it's little wonder we're at new highs right now. That's the good news. And all this is good news right now. The bad news is we are very overbought. We've had one heck of a run in the last 5 days. We're up almost, 240 points or so? That's about a 5% move in the last 5 days. That's pretty stretched going into the end of the year right now. So the question is, where do we go from here? So usually the game in the last week of December, the game is what's going to happen in January. But we had very unusual events. We have Omicron, and we have a 27% gain on the S&P 500 this year. That's quite amazing. Now, I thank my friends over at DataTrek for pointing this out. Average January is up about 1%, 1.2%. It's an up month traditionally. We all know that. But when the S&P registers 20% gains or more, that doesn't happen very often. January tends to be flattish. So, Carl, you get this sort of pull forward on the January gains when you've had very outside gains in 2022. And our friends over at DataTrek point out that in the last 40 years, we've been up 20% or more 16 times. 8 of the times that January has been up, 8 of the times it's been down. So generally, you get flattish January when you've had outsized gains for the year before. We'll keep an eye on that and see how we do going into the last 3 days, 4 days of the year.